waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called. Balance they slow down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Yeah, the crystal clarity is what we need. Some is action, just the prices I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance based drawdown, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 will match traders' speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. With a new era, the elite of a screen, navigating depths where the giants are seen. Seacrest the name, the gold standard inside, turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision, we are the flow.
Good Morning and welcome everyone. Seacrest Markets, Monday morning. Live market analysis, live session. And today we'll be recovering. Today we're going to be recapping markets from last week, reviewing potential macros and technicals for the week ahead, and breaking everything down as best we can so that we give you what you require to trade sensibly this week. So first and foremost, without discussing anything on the charts, today in the US is Martin Luther King Day. So we will see markets closed, certain instruments not trading today. So when it comes to the US session, just be very careful with what you're going to be trading and how you're going to be doing it. And of course, your time in front of the screens. Just allow me to increase my chart for you because I know that my display tends to appear pretty small for you all, even though it runs on a 32-inch monitor. Give me 1 second. I'm just going to quickly select the right screen, number 4, and expand that to 225. Wonderful. So it looks absolutely atrocious on my side. So I hope it looks good for you. We can work with that. What you can see on the screen at the moment is just a couple of trades that I took towards the back end of last week. And I've just shown you the timestamp of those trades. So the first 2 trades were inside this level, and then the second trade was inside this level. Just looking at targeting the weakness in this move, was targeting this area of the volume, which, as you can see, we've come into the pretty much the prime area of it, and then we rejected back up. And weakness really did continue. I was interested in getting short again inside here, and realistically, I would have if it wasn't a Friday and the time. It was quite late, so on the screens it will show you as 12:30 in the US, but obviously I'm not in the US, so you'll see here that it showed up around 5 o'clock my time, which, because we can trade and hold over the weekend, I'm more than happy to do so. But because of the ongoing drama, political tensions, geopolitical tensions that we're seeing across the industry at the moment, we just have to be a little bit careful. In our accounts, it's all about risk management. It's all about capital protection. So, if we were to take into consideration, first of all, focusing on kind of a recap of markets, we had, from a macro and geopolitics perspective, let alone the tariff increment implementation that's coming across around NATO, following Greenland, and new rises in tariffs, as Nelson has put on the right-hand side. So we had, 1 second, where's my notes? We had subpoenas served to Fed Chair Jerome Powell over claims of malpractice, which caused a crisis of confidence in US monetary independence. We had threats from Donald Trump. YM. Okay. Sorry, through me. And we had a lot of macro data that really cast a shadow on where the US is trading into. But what we did see is we saw a massive flight to hard assets. So we saw huge money move into Bitcoin, money move into gold. We did see a lot of volatility around US dollar at the beginning of the week, but it did stabilize towards the back end of the week following the retail sales data. Now, that's, realistically, why would I want to hold something when I'm exposed macro and geopolitically into the weekend? You wouldn't. But being short would have been actually quite nice. So my short would have come in. I'll show you exactly where my short would have been. And I would have been kept into this trade, even if we moved into rollover and stops. Yeah, so I would have pretty much got in at the low of this move. So I would have been in and around here. Stops would have covered the highs. Initial targets, you know, from a management perspective, I would have been looking at 1-to-1, and then I'd been looking at where can I reduce my risk. So trail my stop, would have kept my stop above, and then I would have trailed into the weekend and try to get as much of the hard risk off of the table, because as you know, with volume, with volatility, with spreads, with the way CFD brokerages work, both prop and hard brokers, unless they're providing you with something called a guaranteed stop, there will always be some element of slippage because of the way that prices work. If there's no volume at where you're trying to get out of the market, it will try to fill you at the next best price or next best level and take you out. So, you know, I could have been break even on this trade coming into the weekend, or I could have reduced risk. Had I have been break even and market open and gapped above me, if that was the first area for bid and ask, I don't know. I don't trade ICT or SMC, Mr. Severe S2N. I trade support resistance, supply demand. I trade volume. I trade ATR, and I trade VWAPs. And of course, I overlay moving averages. But we're talking confluences. We're not talking hard technicals. The predominant focus is all intertwined. So it's market structure, order flow, and momentum. Them three are intertwined. There's three ways to stage a market. You've got mechanical, you have discretionary, you have intuition with experience. And being in the game for so long, I'm all three of those, and I'm at the latter part of that. For me, it's all about understanding, again, structure, momentum, order flow, depending on what instruments you're trading, what asset classes. And then you're looking at where volume is. So if you're trading futures, you're looking at bookmap. If you're trading CFDs, you are realistically looking at session profiles, volume profiles, and you're trying to understand and identify where volume's coming in from on a CFD perspective. And then you're looking at ATRs to understand where the actual true range is of a specific market. You can even look at how to calculate your stops based on ATR. So depending on what the average range or the average move is within a particular instrument, you can then, of course, look at how the divisibles are and place your ATR or place your stop on that. And then VWAP will obviously just give you where the volume weighted of the overall average price is. So it will give you the ability to get in and out of the market depending on sessions, depending on instruments and so forth. So the first one, I don't think he's a trader. So I would just like to put that out there. Clearly a great marketer. Very good at analysis from what I hear. But there's no point trading something that I don't believe in. But there's a lot of uncertainty in the markets, and I come back to Nelson's comment, which beginning of the week, uncertainty. We have a US holiday. We need to obviously be aware of what's going on in the overall market. So I expect European markets just to be fairly quiet, other than flying across into safe havens. I don't realistically think we're going to get too many huge moves because the markets are closed later today. But that does mean that there's going to be volatility, but it might just mean there's low volume as well. As you can see on the CFD space, you know, we had that huge gap down from 69.24s to 6900s. And we traded below it, which when markets open tomorrow, that does suggest that we're going to get a continuation to the downside. Doesn't necessarily mean it's going to happen straight away, but we've traded outside of, where were we? Okay, so this is Monday. So, okay, so we traded, so Tuesday, Wednesday, Thursday, Friday the 9th, Monday the 12th. So all of last week's price action heading back into Tuesday's price action, we had So that was the original move, right? So this is the move. Then we had 2 inside days on Thursday and Friday. We've now broken below. So I reckon initial sell-off, well, then we'll come back in, retest. And then from here is where we need to make the big decisions. But last time we had tariff news. Let's go back out to the weekly. Fantastic buying opportunity. So this is the time not to get scared. You know, this was the last starts of the move on the tariff, which we saw peak to trough. We saw 22% to the downside, and that turned out to be a fantastic buying move. So if we get a 22% reduction in pricing, I'm just going to be buying. I'm going to be buying so much. Everything will be on offer. Everything will be in a massive discount. You know, COVID 2020, another great buying opportunity. We saw a 35% move to the downside, and all I saw that was a huge buying opportunity. I'm not going to be buying single stocks blindly. I'm going to be buying ETFs, index funds, and I'll be buying certain single stocks subject to top-down analysis. So I'll never buy something blindly. I'll always make sure that the macros, the micros, and the technicals are still solid longer term. And then from there, I'll buy. Is there consistency? Yes, there is. On the challenge stages, it's 0.5% minimum profit over 3 days, for 3 days, okay? So look at the FAQs to get that specific wording, but there is consistency rules on the challenges and challenge evaluations. So just coming back to the tariff scare, I think a lot of it's going to be baked in. This is all over Greenland, okay? So he wants Greenland. There's clearly a lot of stuff behind the scenes that isn't coming to the fore just yet. It will start to come out. But if we see a 20% reduction or a 15% move to the downside, which I don't think we'll necessarily see as much. Let's have a look. $5,500. 5,500 is a 20% drop from here. I struggle to see a 20% drop, but it doesn't mean it can't happen. You know, 10 to 20%, we've seen it a lot. You know, December 21, we saw nearly 30%. Jan, we saw 35. 21. 17. So there's been multiple drops over the years that have been between 15 and 20. That's a 10% drop. Obviously, that one was 21. So there's definitely an available opportunity to get long once we start seeing the dip. And if you're dollar cost averaging into, you know, the markets monthly, this drop should be welcomed because you'll be buying on a discount. And it's very difficult to be bearish the US long term. So I'm actually quite excited. You know, anything that I scaled in over these last few months is going to be offside if we do see a correction of such. But long term, with the way the US markets and economy is, where it averages around 9%, 8-9% over the, you know, every year, it's not going to worry me. From a day trading perspective, we have to time the markets. With long term, we don't necessarily need to time the markets. We can just wait. So I'll keep my eye on the moves overall. But today is, again, a US holiday, so I won't be too concerned about that. Talk of markets. Okay. So let me just quickly recap the DAX. Oh, don't have it up. 1 sec. All right. So every index is going to be gapping down. Last week, it did make history. The DAX closed above 25,500. Sorry, 25,200, despite a late week pullback. So main areas that fueled it were defense. So defense spending, infrastructure. We discussed this all last week. Obviously, every index is going to be trading down. Look, if you just look at the way the markets are, I don't care what instrument we're looking at. We had a gap down on the FTSE. We're now rallying back up. And the point being is the news is always worse than the follow through. And if investors and traders think that it can't get any worse, they're just going to buy. And that's what we're seeing. The S&P T7000, the Dow briefly touched 49,500. So, of course, I will touch on YM shortly as well. Bitcoin, very quick on that. And, of course, we'll proper cover every instrument we need to, or any instrument that people want me to discuss and technically break down. But we saw Bitcoin rally to nearly 98,000. It retreated towards the end of the week to around 94.5. Of course, over the weekend, we'll have seen where we're trading at. Market sentiment around Bitcoin was pure greed. Regulatory uncertainty as major US crypto framework bill was delayed in Congress, which means that everyone's now just going to be getting long because if it's been delayed, suggests that we are uncertain about the future, which means we could be bullish. So, of course, people are just going to get in, try and take as much profit as possible. From a gold and silver perspective, which I'm not showing on screen, gold obviously traded at 46.40 an ounce midweek, which then consolidated. Overall, it was about 2% over the week. Silver, $93 a troy ounce, and then, of course, parabolic move around that. But we did have a pretty big correction, 7% correction on Thursday, which was due to the war premiums. So Iran, the US, war premiums, and it began to fade. Interesting nonetheless. So this week, let's talk macros. I know I appreciate this is boring, everybody, but these are the informations and vital pieces that you need to take away for the week ahead. It's a slower start to the week. US markets are closed. Over the weekend, as we know, President Trump announced a 10% tariff on 8 European nations. Germany, Sweden, France, and the UK were included. And the reason that is because they're opposing the acquisition of Greenland from the US. So what this will do, as you've seen, it dents risk sentiment. We've seen the DAX under pressure. We saw the FTSE open under pressure. We saw the US indices open under pressure. And we saw Bitcoin, of course, open under pressure as well. It traded down to 92,500 on the morning opens of the European and UK sessions. In terms of high impact news this week, of course, due to Martin Luther King Day, US markets are closed. I'm expecting low liquidity. The whole market will be as well. It doesn't mean you can't trade. It just means you need to trade very carefully and be very nimble on any position you take. We also have the IMF World Economic Outlook ongoing today as well, which suggests new global growth projections for 2026. It's going to be dire for the majority of the world. On Tuesday, we have China GDP for Q4, which from an investor and a trader perspective, I've always found that China are just on the coattails of the US, and they're just trying to create everything that the US does for cheaper, and they're not very good at it. So this is one of the biggest reasons that I just don't invest into China. From a GDP perspective, there's a forecast that suggests that it will be at a 3-year low of 4.5%. So big data coming out on Tuesday for that. Wednesday, we have UK inflation, now a third world country, which is going to be critical for the pound, and it will be critical for the FTSE across the board. Nothing on Thursday. And then on Friday, we have US PCE and GDP flash out from the US, of course, which that's the Fed's preferred inflation gauge, and it will decide whether they cut on the next rate move. So let's keep an eye out for that. So without dwelling, what other instruments do people want me to discuss today? You know, we can discuss indices, whether that be your CFDs or your futures. We can discuss metals. We can discuss FX. We can discuss crypto, whatever you want. Otherwise, I'll just take on a YM, and then we'll come back to any other instruments that I do so wish to later. But I'm happy to take on requests because it's Monday and the markets will be fairly quiet. I just done something wrong. Sorry. Cool. So let's go. I'll do it on the big screen and I'll keep everything around. So YM is going to be similar to how I view NQ, how I view ES, which I probably can't remember if I've marked them up. Every stream I do, but I then take it off and I'll mark them up again. So we have this top. Markets consistently making higher highs, higher lows. We're just going to break it down from left to right, and I'll break down the most recent price action as well. So don't worry. All right, so this is how markets are looking. We could either mark it on the last sell to buy, which will of course push price back into about 48,700, so around 48.75, which will be realistically a nice move. We go from the top. That's a 2.5% move to the downside, which is not exactly that big. No. In November 2025, we saw a 5.5% move. In Jan 25, to an 18% move, which is a big move. Look where it is now. 35%. Absolute huge move. So let's really zoom in on this PA. Shit PA. Awful. So let me just pin this to the top. So we had a fake breakout to the upside here, which is also known as a sweep. Failed to take the low. So overall range bound market inside the daily. We need to break this. We need to come back into here really, or we need to trade upside, right? So for me, we're trading in a range. I'd be expecting for the weakness to continue. But as we've seen in the FTSE, the market obviously has rallied up because the news isn't as bad as we expect. Four hour, of course, we can't see. Give me a sec. 49.3. So give me 1 second. All right, cool. So markets obviously gapped down to 49.3. Was at 49.3 to the left, a weak low. So this is weak. Why? Because it failed to take out this high. So both sides of this are weak, right? That's what we need to look at. Both sides of this range are weak because we're failing to take the highs, we're failing to take the lows. So anything can happen at this particular point in time in the markets. But prices trading at around 49,300s on the daily. I'm trying to mark that as a nicer level. I should have done it straight away, but I didn't. my first real major area to get long from would be inside here, unless we start to take out that high, and then I might be interested in looking at this. But unless this broke out, then this low's weak for me, like I said, and we're now trading here anyway. So let's see where markets open on a Tuesday, realistically overnight, right? Because when Asia comes in, when we get that rollover on the US session into Asia, we get a new day, so markets will open during that period. So nothing done. Nothing done at all on YM for now. I mean, I don't like any of this PA, so yeah, this was the last point of demand or last supply, last support area that caused price to take out new highs. This strong here on the hourly is deemed at least strong. Why? Took out this low. So that's why this level has been strong throughout, which again, it's strong, but it's still in the range. I know I said on the 4 hour that it's weak because it's shit PA. Just shit PA. Come back into the 60. So this high is weak. So that was strong. This high is weak because it failed to take out this, which is that move. Yeah, okay, it took out this one, but that's just internal. This low's weak, like I said, and this high's weak. So nothing really more to add at this moment in time. I need to see a break below one of these levels because at the moment we're trading in a range, so I'm not comfortable at all. I wouldn't know Wasabi. I've traded it for far too long, so I don't know what's hype and what's not. But don't forget as well, when people start getting certain guests on their shows, or people start talking about things more, it starts to trickle down to retail traders. So people start taking note of things more. From a CFD perspective, it's very difficult to track volume because you need to get certain brokerages that actually provide their data to, for example, TradingView, that should provide you the volume. With futures firms, you obviously have Bookmap. So when it comes to YM or NQ or ES or SI or whatever instrument you want to trade, if you're using Bookmap and you actually pay for the data feed and you're not just looking at top of book, then you of course get overall markets because it's centralized. So you can see the total depth of the market across all futures firms. CFDs is a lot harder because of course it's decentralized, so to speak. So every broker potentially has different liquidity providers, be it tier 1, tier 2, and then of course they'll get their data feeds from LPs, and realistically that LP won't share overall flow with market, so the broker will have to provide it, and if the LP does do it, then it's only contained for their clients potentially, or it's only contained for that broker or regards to that broker, so you're more contained. So you don't necessarily have as much information. But it really does support. So if I go back to S&P, sorry, give me a second. What's that? I haven't moved it yet. So if I go back to the S&P and go down to the M5, just obviously, so I was looking at some RR trades. This one I didn't take. That was just analysis from this morning. So these are just RRs to see about, okay, where was the 1-to-1, where was the 1-to-2, where was the 1-to-3, and was there 1-to-4, which there was. Same with this one. And then of course marking out another trade with a better entry, which was this one, and we can break that down if we need to. This was the best entry, this was the best entry, this was a crap entry. But target on this was obviously the low volume nodes with the high volume nodes. We were trading under VWAP, we were trading at extensions of the ATR, we were coming off of resistance, we were coming off supply. Market structure started to break down, we started to break lows, we respected supply. So there's lots of confirmations, lots of confluence to get short, and as you can see, trades worked out really nicely. Had we have taken that trade at 5 o'clock on a Friday at UK GMT or 12:30 US time, then we would have seen a beautiful move. We would have seen an absolutely stunning move. About 4R, yeah. No. So we wouldn't have been able to target this, so we would have been looking to the left and we would have been looking at something around here, so targeting the volume, so maybe targeting that, which is the open. Take 80-90% off of that move, and then you could have let your balance run. So you wouldn't have seen 4-5R in this trade, you would have seen maybe 2.5-3R at the absolute maximum once you've scaled out of the trade. So yeah. This is just, by the way, this is I did a huge markup with notes on my screen for the journal over the Friday break into the weekend. So this is why it looks a little bit messier. And of course, being a US holiday, I'm not trading it today. So I thought, oh, I'll leave it on the screen just to show you all during today's session. Wasabi. So who asked me who I am? Rawishk, did that cover your comments on YM? Let me know. So if I look at the M15 whilst I wait for Rawishk to come back, if he's still in the room, I don't know if he's still in the room, but if he isn't, then I'll keep talking. So higher time frame, we're in a range. I've mentioned that. We've got strong high, weak low. So if I was going to get short off of this strong high, which I don't like, but whatevs. Let's go into US hours. I am in US hours. Wonderful. Do we want to cover Friday the 9th? Probably not. You know, and quite frankly, I wouldn't have taken this trade. Why? Because we're coming into the close. Why? Because futures markets don't let you hold positions overnight, especially on the props specifically is where I'm referring. I don't even know. So I'd struggle to get in short because it's too low and I'm in the range. Here I'd like to get short. Here I'd very much like to get short. The RR might not be available on this, so let's just pin this up. It's not. And that took us all the way to the next trading day anyway. Look. Thursday, Friday. Where you're protecting your risk is entirely up to you. So there's about a 1-to-1 there. About. Not the best, but about a 1-to-1. I'm going to just turn that on so that people can see the comments that are coming in, depending on what stream you're on, whether you're on YouTube, Instagram, or Facebook. So there was definitely a short available. Whether you want to protect that high, protect that wick, it's entirely up to you. We had that sweep there, so we're looking to take out this if that's going to be, if that's going to fail. This sweep should have taken that, which we then swept and closed below, so wouldn't be looking at that. Yeah, I mean, that is a really nice short. If you just wanted to have your stop maybe a little bit tighter just because you're looking at maybe trailing the VWAP or something like that, entirely up to you. If you're short from inside this low, 1-to-1 here, up to you how you're running your stop. I don't know how you trail your stop. It's up to you. When I say I don't know, I mean I don't know how you trail your stop. Not me. I know how to trail my stop. I found a lot of funny comments over the weekend on X. What's going on in the world of X, eh? There's a lot of people on X at the moment. A lot of people. A lot of noise in the industry, unfortunately. I think it's a challenging time. So yeah, had you have taken this at 2R, you'd have been okay. You'd have been stopped for something here. M5. Oh, long in gold, 46.63 SLT. Well done, Tubby. I can look at gold. I'm not going to try and talk you in or out of a trade though. With the way the markets are, everyone's moving to safe haven, so hard assets. If anyone wants to know further discussions on the flight to safe havens, look at any of my last week's live streams or the week before. I mean, look at that huge gap up. That's mad. Mad. This was the area that we wanted to get long from on the higher time frame. Give me a sec. Yeah. So look, last week we wanted to get long from a retest of this area, which meant move down into this level like this, and then a move like this back up. Can't make that up. It's sitting in front of us. Let's go down to the 60. It didn't happen how we wanted to though. Get this out of the way. Just highlighting the gap. So just to give you an idea what's going on, we have lower highs being printed in gold. We also have higher lows being printed on gold. Overall trend in gold is to the upside. So, of course, bulls still maintaining control. There's definitely a lot of a squeeze up here at these levels. Again, volume is going to be thin today because markets are closed in the US. So, realistically, a lot of profit taking, but momentum is expected to the upside. How I would see things at the moment is where we're creating higher lows and lower highs. This is not a technical term, but it's called the pointy end. So the pointy end of the wedge or the apex of the move. Now, from here, there is obviously loads of variations, right? But the three simple ones are, without getting too technical, breakout to the upside, retest continuation, breakout to the downside, retest continuation, or we invalidate the technical analysis and just continue trading to the sides, which, considering the day, Martin Luther King Day, US markets are closed, we're trading on a European right now. So the only market that's open right now is European, UK, so London. Asia's closed, US is closed. So we're just relying on European volume, which that move's happened. So now we're creating essentially a pennant bullish flag. So we have to really wait and see. I think this is the most likely outcome, just trading to the side. I don't realistically expect to get enough volume in this to trade it and push it away in any direction, just because there's going to be minimum vol. So I just think, based on my TA, had I have not even aware of the individual saying that they're long, that's how I'd see things on the M15, because we're trading inside a wedge. Let's look at the M5. I mean, we can see there's volume here, right? There's volume. You know, we gapped up above all of that. Yeah, I mean, there's less weighting on an M5, right? But we've got the high. Where's the last point of demand? It's somewhere in here. This higher then failed to take that higher, so that's strong. What's weak? This. So this is strong. So look, we've got two strong suppliers, two strong areas of resistance. We have demand in control on this leg. Fails to take out the high, so supply is still in control. Why is demand holding if supply is in control? Supply then takes control, demand fails, we come back in. So whilst I'm still interested in longs because of the way the geopolitics is happening, PA is saying otherwise on the M5, so I need to see a better break. I need to see a better break on the markets to get involved. Where did he say? So Wasabi said long gold at 46.63. Okay, so he's in nice. He's at 46.63, SL 46.56, M5. Okay, so you got long, I presume, off of this. So you got long here. Stop at about 56. Yeah, I'm just going to chuck it anywhere. And 46.90 is your target. Well, it's working so far. Starboy R2. Why would we see what you're looking at on BTC if you're not sharing your screen? Like, come on. Why don't you tell us what you're looking at, Starboy? What prices? What's your analysis? I mean, I've just broken down someone else's trade on gold and told them top down what's going on in the markets. You know, there's no volume up here, so it definitely could shift. But let's wait and see. Check it out, mate. Well, how can I check it out? I can't. Because I'm seeing long form. It doesn't make any sense. Are you talking on X? Are you talking on YouTube? Where cross promoting? I don't mind that. I just don't get. You know, why would anyone be seeing what you're looking at Bitcoin if you're not sharing anything? No one knows where you are. Long form? Do you mean long term? Long form. Form is not really a technical term or a term in trading. Form. Long form. Or are you saying I'm seeing longs form? I mean, this person seeing gold long on the M5. It wouldn't surprise me if people are seeing Bitcoin long either. Well done. Buy 92,980. Oh, okay, so you bought that level. So basically, you bought this range. You're buying off of that. You're buying in line with the overall move to the upside, which, as you can see, I've already got it marked out long term. Price targets for me are 135,000 by 9th of June. 9th of June is the forecast. Doesn't mean it's going to hit it. That's the expectational forecast only. These changed. I don't know why they changed over the weekend. $91.80s, $91.9s for your buyers or your instructional buyers from commentary from last week. Yeah, in here, 92.2s realistically. I wonder why you just bought it there. You bought it long term at 92,980. So I presume if you bought it long term at that level, you probably took it on a higher time frame. But I can't, other than getting long from those levels I've mentioned, I can't really see why unless you're coming down into the lower time frames. It's a good buy though. I'm not doubting that. You know, you're up 400 or 500 on that move in terms of the price points. I don't like that. I'd leave that is to this. It's just, you've got an ascending TL. Another, like, look how corrective them. All instruments were very, very corrective over the last few weeks. So we had a breakout. Now I can definitely see a move off of 92.6s. So the initial target would have been that, usually. $92.8. You must have both. Did you buy this breakout? Again, initial target would have been that, and then of course, if you're buying long term, well, 135,000. If you can stomach the move on swaps and everything else, you bought that breakout. Okay, so you bought a long-term trade from an M5 position based on a breakout to the upside. I mean, I can't fault it. You know? Had you have bought it from the breakout retest and traded inside here, then yeah. I mean, let's look at this quickly. I mean, you can't really get much tighter. You know, that's the tightest you could probably buy from that level, which is 78.3s. Nice trade. Where's your stop? Where's your stop, Starboy? Where was your original stop? Was it under here? Was it under here? Was it under here? Oh, sorry. I thought you said I'm seeing long form. You meant longs form. I'm seeing longs have already formed if you was already in, right? You can't see long form if you're already in. 94 TP. 94.379. What about your stop? I'm interested in your stop. I'm not bothered about your upside. 94.37. Is this 39? Yeah. What is this? I haven't got a clue what you're targeting. 92.381. Okay. I really hope that works for you. I mean, that's a good trade, good entry. Really like the entry. Off of that level that we discussed, 92s, 91s. Corrective, broke to the upside, retest, continuation. Traded through all of this volume. Realistically, unless we see further vol develop, 95s is the target. But anything can happen. Anything can happen. Nice trade. Slow start to the week, eh? Slow start. What does everyone think about this week? Are we expecting risk to trade higher? Are we expecting indices to move up? Are we expecting for gold to move up, Bitcoin to move up? Are we expecting what are we seeing? So I broke down most of the charts. Let me quickly look at DXY for the last few minutes. Friday indecision. Inside day. Inside day. And we got a nice bearish move. I think 12:30 the day will pretty much be done. All right, so great trade, Starboy. Good luck. I look forward to actually seeing how that develops out and pans out over the week. If I find you on social media, I'll drop you a message once it hits TP. Or if it hits stop, we'll have a chat. Doesn't matter, does it? Win or lose, we go again. That's sweet. Hope everyone likes the breakdowns. Hope everyone likes the macro insight and the geopolitical. In terms of the instruments covered, of course, we took a look at YM, we took a look at DXY, we took a look at Bitcoin, we took a look at the ES. So remember, today the US markets are closed. Trade smart, trade nimble, protect your capital, and I'll see you same time tomorrow, 8 a.m. UK GMT to 9 a.m. UK GMT. Oops, and we'll cover the markets and everything that's gone on from today. So have a great day, enjoy your week, and I will see you all this time tomorrow. But if you want me, please find me and we'll have a chat. Take care and enjoy your trading week.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets.